crypto, here's Bitcoin, 3 month on 3 month, just reflects these financial conditions and the economic surprises. So the economy is weaker, financial conditions were strong in the past, and Bitcoin has already priced in the entire thing. The good news is the financial conditions index, which is the dollar, rates, and oil, is rebounding like crazy. Strong conditions lay ahead. The economic surprises index is not finished going down yet. It will go down a bit further. Maybe the Fed will be able to cut in April. I've been saying this forever. This is the entire game. That's what they're trying to do. Economic surprises should be weaker. Then we're going to rebound, and the back end, the next part of the year is going to be very strong.
Bitcoin's recent price drop has reignited fears that the bull market might already be over. After months of strong gains, the sudden downturn has left investors questioning whether this is just a routine correction or the start of a prolonged decline. Altcoins have been hit even harder, with many experiencing double-digit losses as sentiment across the market shifts from euphoria to uncertainty. At the same time, macroeconomic factors, including a strong US dollar and tightening financial conditions, are adding to concerns that risk assets, including crypto, may face more pressure in the months ahead. With recession fears growing and liquidity tightening, many traders are beginning to call for a deeper correction. Some argue that the Federal Reserve's reluctance to cut rates quickly enough could suppress risk-off assets like Bitcoin, while others believe that this latest price action signals the peak of the cycle. The conversation on social media is dominated by panic, with many pointing to economic weakness as a sign that the rally is over. However, while the market narrative grows increasingly bearish, renowned macro analyst Raoul sees a very different picture emerging. Powell believes the recent downturn is not the end of the bull market, but rather a predictable part of the cycle. He argues that Bitcoin, much like in 2017, has already priced in past financial conditions and is simply waiting for the next liquidity wave to drive prices higher. According to Powell, financial conditions are already easing, inflation is falling, and the Federal Reserve may soon have the cover it needs to begin cutting interest rates. If history repeats itself, Bitcoin could be on the verge of a major recovery, catching bearish investors off guard. Powell lays out his super bullish outlook in a recent video published on his Raoul The Journeyman YouTube channel. As we bring you clips from the video, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for the support, and enjoy.
I have been saying for a long time now, is the strength of the dollar, this is the dollar inverted in pink, the strength of the dollar after Trump got elected leads by 2 months the economy and financial conditions. As Trump was clearly going to start winning, the dollar started rallying. Oh my God, tariffs. Oh my God, whatever it was. And they started rallying the dollar, which is what happened in 2017. And what happens is it slows down global growth. The dollar is the most important input to all of global growth. And so the US Economic Surprises Index, the SESI, has been falling in line with this. Twitter, meanwhile, loses its collective shit and says, we're going into recession. It's terrible. Scott Bessent told us to. A, Scott was a Global Macro Investor subscriber for a long time. And B, it's not a recession. It is a weak patch in data driven by financial conditions that tightened last quarter. If you look at it going forwards, on a forwards basis, it's been easing fast. So we will see the economy weak this quarter, and then it will start to strengthen from a weaker base. This is not a recession. Don't be ridiculous. This is what happened last time Trump got elected in 2017. Exactly the same reaction by financial markets and exactly the same outcome. Economic data weakened, the DXY had strengthened, then it began to weaken, and economic data followed it, and we got a big boom. And we will see very similar. The dollar drives things like the ISM survey, or this is the services PMI. Services PMI was weak. Everyone's like, we're going into recession. The services PMI is weak. We're all really, all it's doing is following the dollar. And the dollar is leading and says it will bounce. So it will bounce. And then crypto, here's Bitcoin, 3 month on 3 month, just reflects these financial conditions and the economic surprises. So the economy is weaker, financial conditions were strong in the past, and Bitcoin has already priced in the entire thing. So the damage has been done. Okay, what's the good news in all of this? The good news is the financial conditions index, which is the dollar, rates, and oil, is rebounding like crazy. Strong conditions lay ahead. The economic surprises index is not finished going down yet. It will go down a bit further. Maybe the Fed will be able to cut in April or March. No, it's March now. April or May, whatever it is. Maybe they'll be able to sneak in a couple of cuts. If we see the trueflation index, inflation has been falling off a cliff. I think the Fed get cover to cut, which is what they want because they need to roll the debt. The everything code, if you haven't seen it, A, ask the Raoul bot about it. B, watch the videos on it. They need to get rates down so they can roll the debt at roughly around trend rate of GDP growth. So they need to get interest rates down to 3% or lower. Guess what? The Fed today, where do they think interest rates will be? 3%. Where do they think economic growth will be? Around 3%. I've been saying this forever. This is the entire game. That's what they're trying to do. Economic surprises should be weaker. Then we're going to rebound on the back end. The next part of the year is going to be very strong. 2017, those of you remember, was an amazing year. And I think we'll see something very similar. Bitcoin priced in those financial conditions, which were leading by 3 months. Bitcoin's already priced it all in. So it's the worst news is in. My guess, probably up only. The chart you all care about that we came up with and every in the world has copied, Global M2, 10-week lead versus Bitcoin. It's worked perfectly. I didn't expect it to be work as perfectly, but it is. But basically, we're turning the corner and we should start to see higher prices. And the higher prices will come quick, and the higher prices should take us all the way back to the highs pretty soon. Not soon like in a week or two, but soon like in a couple of months. So I think what you've all had to go through is a boring sideways consolidation pattern with a slight down bias. Your alts have been nuked, but nothing out of the ordinary. We saw this in 2017. We've seen it now, and we are very, very close to the turnaround. So patience is all I keep asking for. Stop being so dramatic. It's funny. It's actually boring. It's like you do not get 150% returns a year from an asset without drawdowns. You will have to get used to this. You have to stop worrying at this point in the cycle. We peaked in the cycle earlier in 2021, and we peaked because the business cycle had peaked. This time, the ISM is still low. And so we barely started the cycle. So I know we all say it's so early, nothing's really happened yet. It hasn't. We had phase one of the banana zone, which was the breakout of that consolidation range. This is the consolidation phase two. Then we'll get into the much more important banana zone phase two. It is all coming.
Pal has been talking about the second phase of the banana zone, a period characterized by rapid and substantial growth in cryptocurrency prices, commonly known in the crypto community as alt season, for quite some time. Late last year, he predicted this brief consolidation phase during tax season. He urged investors to take some lifestyle chips off the table to enable them to stay positive through the consolidation phase. While crypto prices might not have gone as high as many expected during phase one, there's no denying that Bitcoin did go bananas, moving from less than $50,000 at the beginning of 2024 to over $100,000 by November. Now, Pal is predicting phase two for both Bitcoin and other leading cryptocurrencies like Ethereum, Solana, Cardano, XRP, Sui, Dogecoin, and others. He is not discouraged by ongoing discussions about a recession or the beginning of a bear market. Instead, Pal has drawn parallels between the current cryptocurrency bull market and that of 2017, noting striking similarities in their macroeconomic structures. In both cycles, Bitcoin experienced multiple significant pullbacks, 5 major corrections in 2017, each lasting 2 to 3 months before reaching new highs. During these periods, altcoins often saw corrections of up to 65%, patterns that are reoccurring in the current market. Furthermore, Powell continues to emphasize the role of global liquidity, particularly the global M2 money supply, in influencing Bitcoin's performance. He observes that Bitcoin tends to correlate closely with changes in the global M2, suggesting that as global liquidity increases, so does Bitcoin's price. Let's get back to the video.
Bitcoin in the business cycle. This is what has helped me through my entire time I've invested in Bitcoin, is this log chart. I showed it all the way through in 2020, all the way through. It works beautifully. We are currently kind of like this 15, 16, 17 cycle. We're still kind of a little bit subdued, but in a beautiful uptrend. Bitcoin's on 600% from its low. And then what we will get is, as we hook into the next phase of the banana zone, we will start hooking higher into this. Now, I know many of you say it's diminishing returns. It won't do this. It'll be, I don't give a right now. Right now, just higher. We'll figure out the rest later. But right now, higher. ISM. ISM, the business cycle. The business cycle drives crypto. The business cycle implies Bitcoin implied pricing is low versus where the ISM is right now. But when we start looking at this, this is going to get interesting for you. These are not projections. You morons who want to come troll me on X and saying, you told me this and I demand my money back. I'm not interested in you. I'm trying to give you contextualization. If we get to the one standard deviation level by the end of 2025, we're about 210,000. If we get to two standard deviations, it's 400, and it's about 800,000 if we get to two standard deviations. Now, we've hit two standard deviations every other time. Will we hit it this time around? I doubt it, but it's possible, right? What's the probabilities? I don't know. The probability of 210,000, I would say, is like 70%. 412,000 is like 40, 35%. 800,000, I don't know, 20%, 15%. But that's kind of the rough idea. And again, these are not predictions. They're contextualization. But when we look at the ISM pricing, ISM we know is bottoming. It is just coming up from 50. And if you see the ISM in black here, it's cyclical. That's why it's called the business cycle. And it tends to get to somewhere between 55 and 60 something. So at this point, we've got Trump, tax cuts, we've got tariffs, we've got a confusing picture, but at worst, it should get to about 56. 57.6, well, that would put Bitcoin up here, and that would put the ISM, if we got a full cycle, it would put it at 63. So those go back here. So only to get an ISM of 57.6, which would be very subdued, it would give us 412,000. If we were to see an ISM hit, let's go back to this one, hit 63, which is not uncommon, we get to 800,000. Okay, so you can now see the strength of the business cycle drives it. The strength of the business cycle has been driven always by the financial conditions beforehand. So when we look at the financial conditions, policy, liquidity, leading indicators, it's already saying that the ISM should get to 56.2. Let's go back to this. 56.2, well, that was this one, roughly. That's saying, well, financial conditions alone tell us we should be getting Bitcoin over, let's say, 300,000. Okay, now, is that my prediction? No, it's not a prediction. It's like a contextualization of understanding of how this could play out. Bitcoin ISM. So you can see this, the ISM above 50, which is where we've just started here. That is when we get the acceleration phase, the banana zone. Where's my banana zone? You guys are morons. You're like worried about the next 2 weeks when what we're talking about is the process over a year. So the banana zone, we start the banana zone. We're in the corrective part of the banana zone, the phase one correction. Then we go to the next bit. But this whole ISM above 50, a growing business cycle, is what drives it. Then when ISM peaks is when crypto prices peak. We are nowhere near peaking. So we barely started. So you all need to relax. Again, the ISM leads altcoin season. Altcoin season is never going to happen again. All of these pundits on Twitter, it's only because of the ETF. We're never going to see altcoin season again. It's all utter bullshit. It will happen.
Like Powell, Plan B is another voice dissenting from the growing consensus that we are now in a bear market. He expressed his thoughts about the current state of the market in a recent post on social media, which reads, "Some are calling for the bear market. I don't agree. The fact that Bitcoin's 200-week arithmetic and geometric means have been close together for over a year indicates reduced volatility and a steady, sustained uptrend, doubling from $20,000 to $40,000 in 2023, and from $40,000 to $80,000 in 2024. What if this steady uptrend continues from $80,000 to $160,000 in 2025, to $320,000 in 2026, to $640,000 in 2027, etc.? Yes, such a scenario would mean the end of the 4-year cycle, earlier than I expected, but it would fit a more mature market. Also note, you can only have a real bear market after a real bull market, and there has been no real bull market. When analyzing Bitcoin's price using arithmetic and geometric means, their convergence or divergence can signal trends and volatility in the market. When the arithmetic and geometric means are moving closer together, it suggests low volatility and a stable uptrend or downtrend. This often happens when Bitcoin is in a sustained bull or bear market with fewer wild price swings. It can indicate confidence in the trend and lower risk. When the arithmetic mean is significantly above the geometric mean, it means high volatility and large price swings. A growing divergence suggests potential instability or bubble conditions, as the arithmetic mean is being pulled up by extreme highs. If the divergence shrinks after a period of high volatility, it may indicate trend exhaustion or an impending correction. If the arithmetic mean is far above the geometric mean, traders might see it as a signal that Bitcoin is in an overextended rally with the risk of a pullback. If the two means are close together, Bitcoin's price movement may be more sustainable and predictable, favoring long-term accumulation strategies. A sudden widening of the gap can be a warning sign of speculation-driven price action, similar to when Bitcoin enters parabolic growth phases. According to Plan B's analysis, Bitcoin's price is currently in a sustainable and predictable phase, signifying we've not seen the end of the bull market. Do you agree with this analysis? Please share your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks for watching.